Stop overcomplicating your financial reporting and know these metrics instead. That's what we're talking about in today's episode of the Profit Pillars Show. I'm your host, Parker Stevenson, CEO of the accounting firm Evolved Finance and author of the book Profit Pillars. Now, if there's one thing I've seen repeatedly over the years as online and modern small businesses grow, is they start to overcomplicate, overthink their finances, and start to make expensive decisions or unnecessarily change systems that actually can still work for them because they think there needs to be something more. And I get the reason why business owners feel this way, because they don't always have a clear understanding of how to track how money moves in and out, how you get certain data points from your finances, get certain key metrics from their finances. And that's where obviously at Evolve Finance, we try to help them with that stuff. But at the end of the day, I talk about this in my book, Profit Pillars. Finance can feel overwhelming. Most small business owners barely took any finance classes in college. And even if you did, even if you have a business degree, it doesn't mean that what you learned in school translates to small business. Small business accounting and finance is very different than corporate accounting and corporate finance, which is what most universities are going to teach. So there are a few ways, though, that business owners really overcomplicate their finances or make this harder than it needs to be. A lot of the times they are telling their bookkeeper to put more detail onto the P&L, but more detail actually isn't always useful for understanding the business's finances more deeply. Creating too many financial accounts in the business. This is something small businesses do as well, like smaller online businesses can do. But larger businesses, they get bigger. So they go, oh, we need more bank accounts and more credit cards and more lines of credit and all this stuff. And that makes it harder for them to keep track of what's going on, which subsequently makes it harder for their bookkeeper to keep track of what's going on. And then also hiring like these CFOs, which again, I do think fractional CFOs can play very specific roles in, let's say, like 7-figure online and modern small businesses in terms of taking what's in the books and creating forecasts and budgets, creating some customized reports. But what happens is a lot of times CFOs, they want to do the bookkeeping themselves. And just because someone's a CFO doesn't mean they're necessarily a great bookkeeper. Bookkeeping tends to be a different skill, or the fractional CFO will have specific needs they're trying to meet on their end in terms of getting the reporting and data they want to the clients, but those needs don't necessarily match up with really accurate, really clean cash basis financial reports, which I've talked about accrual versus cash. We'll probably touch upon it here in just a second. And I just think accrual is overly complicated for most small businesses doing less than $10 million a year, unless they're a manufacturing or a retail business. There's a few exceptions, but for most online and modern small businesses, they don't need accrual. But CFOs love to get into that stuff. And number one, because it's a way for them to showcase their knowledge and provide a lot more detail. But again, more detail doesn't necessarily make for faster or better financial decision making. So really, when it comes down to it, and maybe I'll think of something later that I would want to add to this list, but what I find I've talked to our clients about the most really since 2014, when I got into this industry and started working with Corey at Evolve Finance, there's really only 4 main metrics that are crucial for small and modern online businesses really doing less than 10 million a year. Businesses where you don't have inventory, you don't have all this financial complexity, where you have a profitable business, a straightforward business model. You really need to know 4 things. Number one, how profitable is your business from a cash basis standpoint? Money in, money out every month. How profitable is the business? Should be pretty straightforward, but I'll talk about why that's not always the case. What are the biggest factors affecting your profitability? So which expenses are causing profitability issues, or which expenses are actually really being managed well and helping the business to stay super profitable, right? There's a story that happens from revenue through expenses to profit. So do we know that story about why or why not we're profitable? And a lot of the times the expenses are going to play a big part in that story. What is your cash flow like? Because cash flow is different than profit. Sometimes cash flow and profitability can look very similar and can be very similar numbers. But the larger your business gets, chances are the bigger gap there's going to be between profit and cash flow. And a lot of the times that's because the business owner is taking more distributions and paying themselves. So I promise we'll explain that here in a second. I've talked about cash flow relative to profitability in the past, but I'm going to touch upon it again here. But then lastly, what is your tax liability? How much do you need to have saved up for taxes? Those are the four things. How profitable are you? What expenses are having the biggest impact on your profitability? What is your cash flow position? And what is your tax liability? And do you have enough saved for taxes? So let's go through each one of these things really quickly, because a lot of the times overcomplicating your finances makes it difficult to figure out these basic metrics. And so I want to explain and share what I've seen business owners do to make these basic metrics more difficult for themselves, and how you can still get the metrics you want without screwing up get these big four metrics that you should always have complete clarity into. So let's start with profitability. How profitable is your business? Now, the easiest way, this can get convoluted, is with bookkeeping being done with cash versus accrual. So I know I mentioned that before, but accrual makes it hard to know what was your actual cash profit each month, like how much money came in, how much money came out. And if your bookkeeper is really trying to do the books in a way that allows for a cash report to be generated accurately while still being able to run accrual reports, then it should be fairly easy to find your cash profit position on a monthly basis. But that can really overcomplicate things. Aside from the fact also, if your bookkeeper is doing cash basis bookkeeping like we do for our clients, but they're just not good at it, right? Like they're putting stuff on the P&L that should be on the balance sheet. There's things on the balance sheet that should be on the P&L. That will also affect your true profitability of the business and can have actually massive implications for your tax bill as well. So profitability isn't always a given. And I've talked about this before. Cash basis bookkeeping is to do it accurately and well, you need to be anal retentive. You need to have good systems and processes for catching mistakes, catching issues. But accrual accounting is even more difficult. And again, I believe we've already released an episode about accrual versus cash. So if you are a larger online business struggling with accrual accounting, go listen to that episode. It might give you some insights into why. But ultimately, cash basis bookkeeping is easier than accrual, but it still takes attention to detail. You still need to do it right. And you still, as the business owner, need to be somewhat engaged in the process to help your bookkeeper, making sure that personal items aren't going on the P&L and that business items aren't going on like into profit distribution on the balance sheet. But those are the ways profitability can be a really big issue. At Evolve Finance, we really focus on being as accurate with our cash basis bookkeeping as possible because we want that profitability number to be super accurate. And especially when our clients are utilizing both our bookkeeping and accounting services, and our tax accountants are working in coordination with our bookkeepers, then especially throughout the year, are we writing off the full amount of certain expenses versus maybe only writing off a portion of that? Can we account for that in the books each month so we're not having to make one big adjustment at the end of the year that might change the profitability of the business at the last second? So there's things that a great bookkeeper can do to make the profitability number each month, each quarter, each year super accurate, super easy to find. Like we put our profitability number for our clients in our clients' dashboards so they literally can find it whenever they need it. They don't even have to go into a financial report or go into QuickBooks to find that number. Now, the next thing is, what are the biggest factors affecting your profitability? So the biggest expenses For us, we group into what we call our profit pillars, but that's kind of unique to us. Again, I wrote a book, Profit Pillars. We have all of our clients' expenses really in one of these big expense buckets, these expense families that we call our profit pillars. And so that makes it really easy for our clients, at least, to get a big picture story of where their money's going to. But what we found is a lot of business owners, if they are involved with their bookkeeper, or even if their bookkeeper just hasn't had guidance or any mentorship around what makes a good P&L, it can make it really hard to understand which expenses are affecting the profitability the most. Because if there's too much detail and too much going on in the profit and loss statement, sure, you can look things up faster without having to pull spreadsheets or anything like that to see how much have we spent on our CRM. But also, when you see all the data on the P&L, it makes the P&L really long, really hard to look at, and it's hard to start to see the trends or the themes in your reporting. There really is this happy medium of like, do we have enough detail that we can still see these themes pretty quickly, but is there not so much detail that we're drowning in the minutia, and it's going to be a lot harder for us to see the bigger picture, bigger story of what's going on with the finances. So knowing how to strike that balance is something that like a lot of bookkeepers don't always think about, especially if they don't think about financial reporting. That's definitely something we do a lot of at Evolve Finance. We're very methodical about how we put together our financial reports and our dashboards around what we really want our clients to see. But the other thing too is like we've seen a lot of accountants that do a very by the book sort of GAAP accounting P&L, where you'll have like all the accounting numbers next to the categories. If you've seen that, you know what I mean. If not, then you might not. But there's these codes, these numbered codes that go next to each category. Those categories match up with the tax returns really easily. But a lot of business owners look at those types of P&Ls and it's almost like another language. They don't understand what they're looking at. The categories don't always make sense for their business. So that's another thing to be thinking about is if a bookkeeper is doing the books just to file taxes, then it can be really difficult to take those financial reports because they're set up for a tax accountant to easily file taxes, not for the business owner or key stakeholders in the business to analyze the profit and loss statement and see what's the story, what are the trends that are going on there. So those are just a few of the ways that like it can get difficult just to figure out what the heck are we spending money on and how is it affecting our profitability. And like I said, that's something we put a lot of focus and attention into at Evolve Finance because we prioritize our clients understanding where their money's going just as much as we prioritize accurate and timely tax returns. You can have both. You can have your cake and eat it too. At least we seem to think so at Evolve Finance. Now, the third thing here, what is your cash flow? So I've talked about this before in other episodes. I'm going to quickly recap this. Profit is your revenue minus your tax deductible expenses. It's what shows up as net income at the bottom of your profit and loss statement. That is your profit. Now, there are certain transactions that happen in your business that don't show up on your profit and loss statement. For instance, your income tax bill. If you're paying your income taxes for your business out of your business's checking account, that is not something you write off on the profit and loss statement. That would show up on the balance sheet. So while paying your taxes, let's say you had $100,000 in taxes and you have a $20,000 tax bill, you still have $100,000 in profit. The $20,000 tax bill you pay doesn't bring your profit down to $80,000. You have $100,000 in profit. But from a cash flow perspective, you're left with $80,000 after you pay your tax bill. So cash flow, or another good example for cash flow is distributions. So when you take untaxed profit out of your business and transfer it to your personal account to pay yourself, let's say you had $50,000 in profit one month and you took $20,000 of that profit to pay yourself, you still had $50,000 in profit. But from a cash flow perspective, that $20,000 did leave the bank account, just like it left the bank account when you paid your tax bill. So really your cash flow position is you're left with $30,000 in cash after you paid yourself a distribution, right? So this is the nuance between cash flow. For most modern small businesses, the biggest things that will affect cash flow that won't affect profitability is paying yourself profit distributions or dividends, whatever you want to call them. It's paying off loans. If you took out a loan through the business and you're paying that off each month, the loan payment doesn't show up as an expense. Maybe the interest on that loan will show up on your profit and loss statement, but you paying the money back, that depletes the business of cash, but it doesn't affect the profitability. You don't get to write off your loan payments. And then again, paying your tax bill. It's very similar to owner draws, profit distribution, dividends, but I know a lot of business owners look at that a little differently. But if you're paying taxes out of your business, then that's going to be another example of a cash flow affecting transaction, but not a profit affecting transaction. Okay. Now, the last thing to be checking, to be paying attention to is what is your tax liability? And again, if you have a clear understanding of what your profit is every single month, as you move out through the rest of the year and your numbers come in for the rest of the year, then getting a rough calculation of your tax liability should be pretty straightforward. It shouldn't be overly complicated. But what we found is that it can get a little complicated if you're not engaged with your accountant throughout the year. And so that's why tax planning has become such an important part of being a business owner. Tax planning used to be something that was kind of done for much larger businesses because tax planning is definitely more expensive than just tax preparation, which is, we're going to file your taxes. If we can do some things to save you money on your tax bill, cool, we'll do it. Otherwise, this is it. Like we just gotta file your tax returns, and whatever you save is what you save. But real tax planning takes a little more effort. It takes a lot more coordination, and it takes being proactive much earlier in the year to reduce your tax liability. But for instance, at Evolve Finance, our tax planning service, we're coordinating with our clients throughout the year to not only make sure we're putting these tax strategies into place in their business, but also helping them to calculate like what should you be saving for your taxes throughout the year, especially as we finalize some of these tax strategies in their business. Now, all of a sudden, it's affecting what they're going to owe in taxes. So let's account for that and adjust what you should be saving, business owner, for your tax bill. So at a very minimum, if you do have good cash basis accounting in your business and you know what your profitability is, at the very least you can talk to your accountant and go, hey, what percentage of this roughly should I be saving? Or if your accountant has set you up on a quarterly estimate plan, that helps too. But if your business is growing, you're likely going to owe more in taxes this year than you did last year. So getting that rough estimate of like what percentage of my profit should I be putting aside for taxes is something you can talk to your accountant about. But again, like at Evolve Finance, if we have really profitable clients, we want to push them into our tax planning service so we can much more proactively save them money on taxes and help them better save what they need to save for their tax bill at the end of the year. So really what this all comes down to is bad bookkeeping and especially like a messy use of financial accounts, like opening too many accounts, having too many merchant accounts, too many CRMs, too many different places where financial data can be pulled from. These are really the biggest barriers to most businesses understanding their numbers better. Because when the bookkeeping's bad, but you don't understand that the bookkeeping's bad, that's when you start to look for more expensive fixes like CFOs or more complex financial reporting software. And a lot of the times these are band-aids for bad foundational financial data where the data is just not being handled in a clean way. And so deep insights can be had from a clean P&L that's organized and makes sense for your business model. I could analyze any of our clients' profit and loss statements within 10 minutes and give them a deep understanding of how their business functions and where they need to put their focus and attention. And I'm not a CFO, and especially fractional CFOs for small business owners. Like I said, they can play a really important part and they can help with some key things. But what a lot of business owners don't realize, and I can't remember if I've said this before in the podcast, large organizations have so many spreadsheets, so many custom dashboards, so many things that they build from the core financial data, because there is no like bookkeeping software that allows the bookkeeper to do all the great bookkeeping and gives you perfect financial reporting and allows you to pull all the data in any way imaginable. Maybe we'll get there one day, but I doubt it. It's just that the functions are so different. Good bookkeeping software needs to function in a specific way, but if the bookkeeping is done well in that software and the financial data is accurate and organized cleanly, then whether it's the business owner, an operations manager, a fractional CFO, they should be able to export a profit and loss statement, export the balance sheet, export the general ledger, export whatever they need to export from the bookkeeping software, and then build great spreadsheets that might help the business owner to better understand more niche or more detail-oriented parts of the business. Not every financial insight should show up on the P&L, because if you're trying to accomplish that, you're probably making your numbers messy. And the P&L, in our opinion, really should allow you to see the 4 things I just talked about. Clearly see your profitability for any given period of time, or really a month, a quarter, or any other portion of a year. You should be able to look at your P&L and see what the biggest expense categories are affecting your profitability. You should be able to work with your bookkeeper to look at your profitability and then have them help you find the cash flow affecting expenses that might be affecting cash flow. That's very helpful when your business looks profitable on paper, but you feel like you don't have a lot of money in the bank account. You don't need a fractional CFO to help you with that. Your bookkeeper can really guide you and help you to see which transactions are reducing your cash without reducing your profit. And again, those are going to be loan payments. It's going to be distributions that you pay yourself, and it's going to be paying your tax bill. Those are the 3 most common ones. And then the last metric is your tax liability, which again, if you have a great accountant who can clearly see the state of the profitability of your business, planning for taxes should be a lot easier. If you have those 4 things, then anything you want to add on can be done in spreadsheets or other reporting software, but those things will only be as good as the core financial data that's happening in your bookkeeping. So that's all I got for this episode, y'all. If you need some help with your bookkeeping, with your tax planning, that's what we do at Evolve Finance. We're really stinking good at it. Go check us out at evolvefinance.com. Set up a discovery call with our client engagement manager, Whitney. And know that the discovery calls are free, and we really want to make sure we're matching up with the right businesses that we can help the most. So it's a low pressure call, especially if you are in that mid to high 6-figure range, or anywhere in the 7-figure range. Chances are we're going to be able to help you. So go check us out at evolvefinance.com and set up a discovery call. Otherwise, if you want to learn more about our profit pillar system, just learn more about what you need to understand about the financial side of your business, then check out my book, Profit Pillars. You can find it anywhere books are sold online. But as always, thank you for watching. Thank you for listening. I'll see you in the next episode.